Stop messing around, stop fooling around, stop delaying, stop procrastinating. Get up, get out, get it done. Everything is possible, nothing is a problem, and anything can be overcome. I just get my ass up out of bed, I get my shit together, and I get out and I start the fight. And that will transform you from a mere mortal into a superhuman being. I've never, ever, ever met anybody who told me that they got rich watching their IRA or their 401k. They figure out ways to extract from their property owner things that they're otherwise not entitled to. By what's called a holdover. They'll hold over the property owner. If they're not the legitimate tenant in the apartment, maybe they do an illegal sublease, maybe they aren't truthful on their application and they overrepresent their income or somehow fake a credit score. I mean, it takes a lot of effort and professionalism, but it can be done. And it puts the property owner in a real pickle.
Are those things you've experienced yourself?
I've experienced all of it. I've experienced, George, I experienced one time, so in New York City, up on Broadway and 131st Street, I had a rent roll for a new property. I was all excited. I was the new property owner, manager. I was going to go knock on doors, introduce myself. I had the rent roll. There was a name on the rent roll, Sylvia Schwartzman. And I could see that she'd been in the apartment for years. So she was a legacy tenant left over from the rent control eras. And she was presumably an old woman at that point. I was excited to meet her. All my tenants, I was excited to say hi. I go knock on the door. I say, hi, my name's Peter. I'm here for Sylvia Schwartzman. And this huge, big guy is like, yeah, I'm Sylvia Schwartzman. And I'm like, okay, are you a relative? Are you a friend? No, she's my girlfriend. She's my girl. She's my lady. And, so clearly this was a situation. I think Sylvia, the tenant of record, passed away. I think that her apartment was taken over by someone after that, whether it was this guy or
maybe multiple people.
Multiple people. And the reason why you care is because this gentleman was sharing in receiving the benefit of the rent regulation that's in place in this particular apartment in New York City. It was a very, very low rent. It was a huge 3 or 4 bedroom apartment, and I think the registered rent was $350 for Sylvia, but in her name. That benefit only goes to the registered tenant. If the registered tenant isn't the one who's occupying the premises as a primary residence, then the apartment becomes deregulated, a bit of a process that you have to go through, but you can deregulate that apartment. Of course, you can understand in New York City at the time, things are very expensive. You pay a lot of money for these buildings. You want to make sure that the people who are the appropriate tenants who are registered, the real tenants that are registered to live in those apartments are the ones that are actually in occupancy of the apartments. Otherwise, you've got people that are in jeopardy of a holdover case. You'll have to file a holdover case to seek possession of your apartment if someone is an illegal occupant of that apartment. Well, this guy was an illegal occupant of the apartment, and it was a big 3 or 4 bedroom apartment at $350 a month.
Holy shit.
I think it's fair to say that it's obvious why that would be a problem for the property owner when that apartment would otherwise go for $2,000 or $3,000 a month without the theft of that regulation benefit going to the unregistered tenant. So it was a sticky situation, but certainly happens all the time, and that's why you got to stay on top of your property. So during a pandemic, people couldn't pay rent because they were out of work. There was sudden loss of employment. There was wage carnage, all of these things that we saw for the bulk of 2020 and even into 2021. I mean, it's been a tough time for a lot of people out there. But what you saw before the pandemic was professional tenants signing leases on great real estate and paying the security deposit and first month's rent, and that was it, not paying anything. And it would take the property owner months and months and months to go through the court system, in some cases, to regain possession of the apartment for non-payment of rent. So ultimately, you've got a situation where the tenant's going to pay first month and security deposits, 2 months rent. It might take, in New York City, a year for the property owner to get that tenant out. Not during a pandemic, even pre-pandemic. 8, 9 months, 10 months, a year wouldn't be uncommon.
Man.
So the tenant would pay 2 months on a year of occupancy That sounds like a pretty good deal. That's their motivation to do it. Now, the flip side of that coin is that if the person who's the tenant gave a real name, then they're going to have a credit issue and a judgment against their name. So that's the risk they're going to take. But a lot of these people give fake names, fake social security numbers, fake IDs when they submit an application.
Yeah.
And they game the system. They get access to this real estate, and then they just sit there for a year. They don't pay anything, and then they move on to the next one.
Goes back to something we've touched on is every building's a business. And I think a lot of people don't think of that being the case. And I think a lot of people just think of landlords and property owners in their own kind of category.
They do.
And don't think of it as, well, this is a business. It might be a small business, it might be a large business, but it's a business, that has to, have income to survive.
It's a business, and it's so intertwined with the public revenue collections, the taxation systems, the infrastructure of our communities and our cities and our states. Property taxes are the single biggest source of revenue for states and cities everywhere. Where you live, where I live, doesn't matter who you are and where you are, property taxes fund police, fire, schools, health, safety, roads, everything.
Yeah.
So without property tax revenue being stable, without predictability of property tax revenue, municipalities have a hard time funding their budgets, and then they have to go to bond markets and raise money from the debt in the bond markets to supplement budget shortfalls. So if you've got income-producing property, which is being taxed as if it were generating a certain amount of income, but it's not, because you've got people gaming the system, suppressing the revenue, suppressing the rents of that building, it's an issue. The property owner is going to want to seek to regain possession of those apartments and re-rent them to a new tenant who's the appropriate and registered tenant for that apartment, paying whatever the free market rent is, or even if it's not the free market rent, even if it's a regulated rent. The regulated rents are fine as well, as long as it's the registered person, the legitimate person who's in there occupying the unit and paying that rent. But there's rules out there. If everyone plays by the rules, the systems work pretty good and they're decently efficient most of the time. And look, property owners have to play by the rules too. What you have a lot of times is these horrible property owners that don't fix things, that don't maintain services and conditions and quality of the interiors of the apartment or common areas, and they just don't put the money back in and maintain and keep their properties up, and that sucks too. So really everyone's got to step it up and play by the rules, but play by the rules. Right now during the pandemic, unfortunately, George, we're seeing it more than ever. Right now property owners can't evict. The courts aren't open. People are saying that they don't make money and they're not earning wages when we've learned that many of them are. And certainly there's many that aren't, and it's a tough thing for them. And of course, we're here to do whatever we can and what we're obligated to do and required to do for our residents who are having a tough time and out of work at the moment. But there are examples of people who are claiming to be out of work and not paying rent, but they're really working. And what do? It's a tough thing. I'd love to hear from the public about what you do in those situations. As a property owner, do you pick up the phone and say, hey man, I know you're really working. You told me you weren't. You haven't paid rent in 8 months and I can't evict you. Why don't you start making some payments? Is that an appropriate thing to do? Yes or no? I want to hear from you. Because this tenant, in the example that I'm citing, isn't playing by the rules. They're saying that they're out of work and not making income. Now look, even not being out of work, things can be very tough. Maybe they've got some medical bills, or maybe they've got other things that are eating up the income that they are making that they told me they weren't making. But talk to me. I'm asking for upfront, honest communication about it. There's programs out there. There's federal aid. There's state aid. We're getting our tenants plugged in with grant programs and the state aid programs to get arrears paid, which is great. We've done that maybe 6 or 8 times already. Let's try and figure out a source to get your arrears paid if you need to use your money that you are making for other things. But, I think it's a problem when tenants start gaming the system and having a untruthful and dishonest relationship with the property owner. That's not a great way to go.
Yeah. Yeah, well, and we've said many times that if you can have a relationship where there's open communication, where there's transparency about what's going on either side, then that's what you want.
Yeah.
But otherwise, that's when it becomes a problem. So that makes sense. It was about a year ago, I think it was next week, I think March 15th was when I turned to my friend Kevin. We were on our way to the gym, and I said, Kevin, I think this is the last time we will ever go to the gym. And he was like, you're fucking crazy. What are you talking about? And sure enough, that Sunday
was
the last time that I've been working out, but I haven't been able to go to a gym since then. Yeah. So what I wanted to ask you is, when lockdown happened, looking back now in 2020, do you feel like there was anything that you did as a business owner that you feel particularly proud of, that you felt like you did particularly well? And are there any things that you're particularly grateful for being in the business that you're in?
Looking back, well, first of all, our friends in the gym business, my heart goes out to them. It's been a very tough year for the gym businesses, the salons, the spas, the restaurants, the bars, obviously. And they're such an important and instrumental part of the fabric of our communities. So these gyms have had a tough time. A lot of them have been able to pivot and do online classes or limited classes or mask-only classes with limited capacity. People are figuring out along the way how to pivot. But it's been a tough year for that group of businesses for sure. So I think about that all the time. And I think about that they're not going to be able to answer this question you just asked me the same way.
Yeah, absolutely.
They don't have that benefit or that luxury. So I feel very fortunate for that in our business. So we're in multifamily. What do I look back at and think that we did okay? We rallied very quickly. We had Zoom meetings every day. It brought us together, and we had several months where we had every day at 5:00, we had a Zoom meeting, because it brought stability to our team. It brought predictability to our team. And they knew day in and day out, we would all be talking. Peter's going to be on the call. Let's all rally, get together, 5:00. And a lot of it was redundant after a little while, but it's okay. The point is that we came together. And in times of crisis, being able to come together is nothing but a strength. So I think that was really positive. We moved very early on cleaning, sanitization, and housekeeping services to our properties. We installed hand sanitizer. We cleaned and wiped down washing machines. We put dispensers with wipes in the laundry room so people who wanted to do laundry could do laundry. We opened up our paid laundry machines for free because there was a shortage on quarters. People couldn't get quarters and they didn't want to handle money. Right? So we opened up our machines, made them all free, all of our buildings. And I was really happy that we did that. Looking back on it with all of our properties, it's probably $100,000 worth of laundry income that we would otherwise use to offset the increased water, sewer, and energy charges that are used to power the machines and provide the service in the first place. Would I like the $100,000? Sure, I'd like the $100,000. But in light of everything, it was our pleasure to open up the machines and do it because you had to do it. Your community needed a solution. That was the solution. So I'm glad that we did that. We created new lease language that was appropriate for the time in governing the landlord-tenant relationship. We were able to proceed with certain renovations and construction projects that we had going on because we made a commitment to working, keeping people working, and to keeping the jobs moving forward. The vendors would call us, the contractors were calling us saying, "Are we going to work? What's happening? What do you want us to do?" One of the first things I did was I told our project management staff, I said, tell everybody to show up to work, man. We are moving forward. We have the money. We're funded to pay them. This project is not contingent on rent revenue, thankfully. So we're funded. Let's keep this going. We want them to show up to work safely. Let's follow the guidelines, but show up to work. We're not cutting off any work. And a lot of projects weren't able to do that. A lot of projects had to shut down. Construction sites had to stop. There was delays. Workers and crews were prevented from showing up to work when these lockdowns were happening. Not at our job sites. We kept them going. And I got phone calls. I got cards from our subs, our electricians, our site contractors, our framers were calling me and texting me and sending me cards. Peter, thank you so much. It means so much to us that we were able to come into work, that we could count on you for this work, and just thank you. So it was really a great thing. I wasn't, of course, expecting that or looking for that or seeking that, but they let me know how grateful they were. That made me feel good. So I'm really proud about that. We used the time while we were working at home to learn how to become more efficient, and we really became more efficient. Our finance department got way better. Our leasing department got way better. It was a head scratcher because our leasing guys got to be out in the field leasing apartments. There was a lot of demand for apartments. People needed safe, clean housing. we're the big providers of that in our area. So we had an obligation to get out there in the market and lease up apartments, and we were able to safely and responsibly. And we alleviated a lot of demand pressure that was coming at us in the marketplace. And we got people moved in and into their apartments, and it was a really great, proud moment for me to see all of that really happen. People on our team stepped up during crisis. You got to step up. We've said that. Our guys stepped up, George, and it was great to see. I felt so proud of my team that they weren't scared and didn't back down and didn't avoid the challenge. They accepted the challenge. They rose to the challenge, and they nailed it, and it was great.
Yeah, especially in this area, we had such influx from New York and Philly and all the cities around that it was a lot of new demand that wasn't expected.
Hey, a lot of property owners couldn't meet that demand. They couldn't rise up. They sat on vacant units. They couldn't get their units turned, cleaned, painted. We upped our staff. We hired more people. We kept everybody working. You want to know what the first thing I did when they announced the lockdowns? The first thing I did was I called my CFO. I said, take me off the payroll, because I draw money from the company. I said, take me off the payroll and send an email out to everybody right now. Everybody's working. No one's getting laid off, because this was amidst of all the layoffs that were happening, and people were getting axed everywhere, and it was like fear in the marketplace, and there was fear in the communities. We didn't know who was going to be working or not. The restaurants were open. They were closed. It was a shit show. I called the CFO. I said, don't pay me a dime. Don't distribute me any of my money from the real estate. Keep it all in the accounts. Tell everybody they're working. We need them. And we did need them. And that was the first thing I did. And I didn't start resuming drawing my distributions from my investment properties and my property management company until months and months after that, when we had a little bit more stability and a little bit more familiarity with what was happening. I was happy that I made that decision. If leadership starts with the top and trickles down, I think that for the team to be able to see that I'd done that was, I hope, reassuring for them. Because when I make a commitment to them, it's a meaningful one. So I'm going to lead by example. I didn't pay myself. I didn't get paid. Everybody else was able to come to work safely and responsibly. Their pay continued without disruption. So I was really, really proud about being able to keep the team fired up and going and paid. It was the right business decision, but it was also the right people decision.
Yeah, absolutely.
Yeah.
So you had mentioned the bond market 2 questions ago. There's been a lot of talk about the 10-year bond yields right now. Will that
rising?
Yeah. Well, do you think will that affect mortgage interest?
Well, sure it does, because commercial and residential mortgage loans key off of the U.S. 10-year Treasury. So as bond yields go up, as interest rates on the 10-year Treasury rise, the prices to buy those bonds go down. They have an inverse relationship. And right now, the government is selling off U.S. Treasuries, and when they sell, they flood supply into the marketplace that puts downward price pressure on bond prices, which creates upward pressure on the 10-year Treasury yield. So sure, that impacts commercial and residential mortgage loans. During 2020, interest rates were very, very, very low. They're starting to creep back up a little bit. They've risen sharply over the past 45 days. If you've got mortgage loans which are expiring this year or next year, you can expect to renew those mortgage loans and refinance your existing mortgage loans at higher pricing, at higher interest rates. So it's going to force property owners and asset managers to really take a look at their principal loan balances and their loan to value ratios and run a projection scenario that contemplates the higher pricing. Because what we saw after 2008, when the banks started to open up and lend again, end of 2010 and going into 2011, when liquidity started to open back up in the mortgage markets, we saw that the borrowers couldn't really afford to refinance the same amount of loan principal at a higher interest rate, because it was just the cost of capital was higher and their buildings didn't generate enough income to pay for the higher debt service.
So they kicked the can at that point?
Well, you kick the can. You hope for lower interest rates. You hope to maybe sell. And when you have lots more people selling tomorrow than you had today, that creates more supply and downward price pressure. So as asset managers and property owners, we're going to have to be very cognizant of where interest rates go, what the borrowing environment is, what spreads are, because, George, it's not just the interest rate, but it's also the spread over the interest rate. That's what banks charge you as a price to borrow money from them. They charge you 250 basis points over the 10-year, for example. So if the 10-year is at 1.5 and they charge you 250 over the 10, you're going to be paying 4 points or 4% on your commercial mortgage in this example. But be cognizant of it. Pricing is going up. Spreads move all of the time. So you got to be wary. If you've got to replace a mortgage dollar for dollar at a higher price, it's going to cost you more, and your debt service coverage is going to be constrained by it because your monthly mortgage payments are higher. You really got to keep an eye on it because your cost to borrow is going to presumably go up as the 10-year Treasury rate continues to increase.
How do you feel about stimulus checks? Do you feel like that's...
The government stimulus checks?
Yeah. What are your thoughts on that?
So what makes you ask? I'm curious.
Well, we've talked about the live off the recurring, invest the bumps. That seems like the perfect opportunity for something like that. So I was
great
curious.
Question and great example. It's a great opportunity to invest stimulus checks. And you want to know what? Most people did. A lot of people, or most people in 2020, when they got their stimulus checks, invested them. Yeah. That fueled a huge portion of the stock market run-up. That fueled a huge portion of the cryptocurrency market run-up because people got their $600. They got their $1,200. Whatever they got, they put it in a Coinbase account or they put it in a Robinhood account, and they started trading, and they started investing, and they started getting into the game a little bit. And we saw that a lot. So even during a pandemic, when people were out of work, I have a friend that told me that he bought Tesla stock in March or April of 2020, and he made like 60 grand from just bought it, put it away, and like a year later, he's got like 60 grand. I think maybe his original purchase was like 10 grand.
Yeah, man.
But he said that his stimulus check for him and himself and his wife and his kids, it was a few $1,000s. It largely went towards that. And I think we saw a lot of that in 2020 and are going to continue to see a lot of that in 2021. Look, they're putting out a $1.9 trillion stimulus package, and stimulus checks to individual Americans, to taxpayers, is a big part of that. And it's a great opportunity for people to take those checks and invest. You want to know how you get started? This is how you get started. Live off your recurring income, invest the bumps. You got a bump coming, you got a stimulus check coming. Now, I don't know what the final amount's going to be. I know they're still arguing over it even today, whether to cut it or cap the increases or cap the limits at which you can get the $1,400. Whatever it is that you're going to get, don't piss it away. Invest it if you can. It's a great opportunity. Invest. You've got a little bit of money now. Whatever the amount is you get, $1,000, $500, $2,400, put it into one of these accounts. Make some investments, talk about it with your family, figure out what you want to invest in, and invest. You can invest in real estate. You can invest in stocks. You can invest in these companies that you're a consumer of already in your daily life. You can buy a portion of shares of Apple and Tesla and Google and Facebook or whatever it is you want to buy a share of. You can go on to Acorn. You can go on to Stash. You can go on to Happy Nest, and you can have access to making your money work for you and investing in real estate and stocks and these different things, and it's great. So completely, it's a great move to invest these stimulus checks. Do I think stimulus checks are good? You know, right now, it's a crazy fucked up world. It's a pandemic. I think we're ending the pandemic. I think we're on the tail end of it. We're getting vaccinated. There's talk about the economy and the world sort of getting out of the crisis mode and getting into a more regular mode, whatever that may mean. But
the new normal.
Yeah. And so I think stimulus is needed. It scares me to death that governments, not just the United States governments, but governments all over the world just print money. This fiat currency is really devaluing every second of our lives. So it makes sense to me that cryptocurrencies are very desirable because they're finite, many of them, and it's a great store of value when perhaps in our world today there aren't so many great stores of value to put your money into.
But another good excuse to invest because you'll need a hedge against inflation as a result of,
Yeah. Look, they continue to make money, print money. Governments will just print money. If people need money, they'll just whip up $1.9 trillion in their magic cauldron, and they'll put it out there in the world, and it'll start floating around in the bathtub. You get a little bit, I get a little bit, they get a little bit, everyone gets a little bit, and that lubricates our financial and economic system. So the lubrication is good, and the confidence and the ease of fear that comes with everybody getting a little bit of money is good. But the printing of money and the devaluing of currency,
it's a slippery slope.
It's pretty scary. And I'll tell you what, I'd rather hold assets than hold dollars. Because if they can just make more dollars tomorrow, which they do every day, then the value of the dollars that I'm holding is just going down. So I need to find places to convert dollars into assets, crypto, stocks, real estate, whatever, because they're not making more of that stuff, but they're making more dollars. So if I'm managing supply and demand, and if I'm managing scarcity, and if I'm looking for investments that are driven by supply, I think everything's driven by supply and demand. Yeah. You've heard me say that.
Yeah.
I'm going to look for converting dollars into assets. Hey, everybody, whatever money you get, cash the check, get it into your bank account, and then get that money out of the bank and into investments and assets. I like real estate. I think what's going to happen in the real estate market over the next 5 years is going to be absolutely mind-blowing. Sure, prices are very high for assets right now. They're going higher because there's another 1.9 trillion coming into the bathtub. There was already 4 trillion that flowed into the bathtub in 2020. Now we're getting another almost $2 trillion. That didn't exist before. Now all of a sudden it exists, $6 trillion. Pay attention because the dollar's getting worth less every second you breathe. Put your money or some of it or all of it or whatever you choose to do, get it out of the banks and put it into assets because that's what the 1% are doing. You should be doing it too, and you can now.
We mentioned crypto a bunch of times just then.
Yeah.
I was thinking about disruption this week, and we talked about NFTs and
I
Bitcoin
love the whole
and cryptos.
NFTs.
Yeah, it's really crazy. I mean, last week you mentioned how excited you are about the NFT movement. And
I
what's
love
going
the
on there.
NFT story.
Yeah.
I'm so fascinated by it.
Yeah.
I'm glued to it.
What do you like about it specifically? What interests you?
An exciting time for IP, intellectual property, because it's now the moment for IP to seize on all of the deficiencies and weaknesses that were inherent in the IP markets forever. Songwriters, artists, content creators, authors, everyone's going to be able to create their content and to be able to authenticate it and guarantee it and get paid for it down the road, not just a one-time sale. It's going to change publishing. It's going to change advertising, promotions, the way companies market and sell to us as consumers. It's going to change how we consume content. We're already seeing over the past 10 years the move away from network TV to Netflix and HBO Max and Disney Channel and Hulu and all of these content providers. This is going to continue. The NFT movement is starting with art, digital art, but it really can be applied to any type of content. And it's a really great moment. Songwriters, for example, have been struggling so much over the past decade because they just don't get paid for the content that they create, yet we consume it all the time. There was a real imbalance. And I think that what we're going to see is that the music publishing industry and markets are going to really change. I think that we're going to see the book publishing markets really start to change. We're going to see art markets start to change. We're already seeing that with the NFT art stories that are going on right now. And we're going to see differences in the way that these companies market and sell to us, and it's all going to mean that the people that are creating the content can get more of a share of the revenue that's generated from their content. It's only right, it's only fair. For the most part, these large companies control all of the publishing, all of the rights, all of the licensing, all of the everything that's out there. Now, they probably paid a lot of money to the artist at the beginning to be able to do that, but what's going to change now is that the artist is going to be able to participate. Every time the content gets used down the chain, they can get a piece for being the original creator.
Yeah.
Right now, if I go and buy a Picasso at an art gallery, the Picasso family doesn't get any money from my purchase of that piece of art. Well, with NFTs, now that's the case.
That the music part really pricked my ears up, being a musician, and I've been listening to a lot of Rick Rubin's podcast recently with Malcolm Gladwell, the Broken Record podcast, and in that they've talked a lot about hip hop is built on sampling, like that's the whole history of hip hop is that way, and his first album with the Beastie Boys, it's all Led Zeppelin, it's samples. And this concept of NFTs and really the semi-fungible tokens are what is interesting to me, is that you could have a whole song made up of semi-fungible tokens that then produce income like samples.
That's what Ice Ice Baby is.
Yeah, exactly.
That's a whole song of semi-fungible samples.
Yeah, I was wondering who's going to come up with the first album that's titled something NFC related.
Yeah.
But yeah, no, it's really wild. It's the future.
There's a great interview of Vanilla Ice years ago. He was asked about the sample for Ice Ice Baby.
And Under Pressure.
From Under Pressure from Bowie and Queen. And he says, well, the original is dun 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 dun, and mine is dun 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 dun. So it's completely different.
Yeah.
Like it was that 1/8 note. And he was like, yeah, it's completely different.
Which is funny. We make fun of that now, but in modern times now, there are contracts where producers will hire out songwriters to write songs, and they get a 10% stake of any of the song. But then if they change a MIDI signal in the chain of a drum beat, because a lot of these songs are just drum beats, that all of a sudden becomes like 30% of the song. So they then get 80% of the songwriting royalties. So again, I think this goes back to what we're talking about with the NFC, is that it's giving the songwriters and the creators more control, and they won't have to be involved in a contract like that.
It is. It's going to help them level the playing field. My songwriter friends just have not been getting paid for creating great songs.
It's blue-collar work right now.
And it sucks.
Yeah.
It sucks. Yeah. So hopefully this will be something that not only helps the songwriting content community, but content creators of all types. And I think it's going to be. Intellectual property is in for a big kick in the ass over the next decade with NFTs.
Yeah.
Keep an eye on it.
So with things like this, how do you personally avoid chasing things like trends and feeling like, this is going to be a trendy thing that is going to stay here and be gone tomorrow? How do you recognize a true innovation?
I don't believe that NFTs are a trend. I think they are the early indications of a long-term shift, fundamental shift in our culture. Same with crypto. I don't believe crypto is a short-lived trend. I think that whatever might be happening in the crypto markets with the volatility, and it's up one day and down one day, and people don't know how to value it, and it's scary. It is scary. You have to be able to stomach volatility, but I think it's here to stay. We're in the early innings of this stuff, guys. I mean, it's first at bat, first inning. You got to look 5, 10, 15, 20 years out and imagine that this stuff is going to be here governing our lives down the road, and I believe that these things are going to be governing our lives. So I'll pick some players and maybe make some investments, and everybody can. That's the great thing. You can get a Coinbase account or a Gemini or a Kraken account, and you can buy and sell crypto, and you can buy and sell NFTs. And look, you got to be careful. I'm not saying everyone should just open up an account and spend all their money on this stuff, because you have to be able to know what you're doing and stomach the volatility. And I'm not here giving financial advice, but you asked me what I'm doing and how I view it. So how I view it is, I think this stuff is here to stay, and I don't want to be on the sidelines watching it happen.
Yeah.
I don't want to wake up 10 years from now and say, shit, I wish I would have XYZ 10 years ago. I don't want to do that. This is big stuff what's happening now, and anyone can get in on it. So give it some thought and look into it. But it's leveling playing fields everywhere, and anything that's creating equality and transparency, and anything that provides access where there was previously none, and anything that sort of trues out the relationship with everybody and everything and makes it more level. I think that's the way of the world forever. The little guy has way more of a chance and way more opportunity now than ever before. I think the big guy and the little guy are getting more on par and more on level with each other now than they ever were before. So I'm invested in things and ways and means that I think are part of that, and I don't think it's a trend at all. I think the banks are going to have a tough time, George.
Yeah.
We're talking about the DeFi movement. I just refinanced my home. I had to fill out a mortgage loan application with my bank, and it took 90, 120 days to process. They got an appraisal, had to go to committee, had to be underwriting. I had to fill out a stack of forms 10 feet tall. I had to do all these things, and it took a long time, 90, 120 days, a long time, I think. I got okay pricing. I got an okay deal and product, and I was able to close on my refinancing. It cost me about $15,000 in closing costs. There's a friend of mine that went to DeFi, and he made a mortgage application in 5 seconds and got an approval in 10 seconds for more money and for lower interest rate than he could from a conventional bank. So why is that a big deal? If DeFi can replace the role of the traditional banking product to the consumer faster and less expensive, which it can, banks are going to have a tough time coming up.
Yeah, and if you're shifting away from fiat currency into crypto or whatever, then keeping a balance on a Coinbase as opposed to a bank account, all of a sudden banks don't have liquidity in the same way they used to.
Hey, some guys I know say the banks are a short right now. So
right now,
right now and for the foreseeable future, but now would be a great time to short them because they're only going down in price, is what he says.
Yeah.
So if you believe what he believes, maybe that's something to consider. I don't recommend shorting right. for anybody that's not really a professional investor. But conceptually, though, I think the banks are going to have a very tough time, and they're going to have to really pivot and readjust because it's going to be tough. If DeFi can give a product to the consumer faster and cheaper than a bank can, why go to a bank?
Yeah, really what we're talking about here is the opposite of what we usually talk about, which is investing in real estate, which is a secure, less volatile situation, as opposed to what we're talking about here is really highly volatile, a lot of risk.
But, it's just because it's so early.
Right, but it's the future.
In 5 years or in 10 years, it's not going to be so early, and this stuff's going to be very stable, very predictable, and it's going to offer all sorts of options to the consumer. Cash is going away. I don't know about you. I used cash for the first time today in months. I went to Frank's Deli next door. I had an amazing sandwich. It's always such a pleasure to go in there. I left a $10 tip on the table, and it was a $10 bill from my wallet.
It's the first time you touched money.
Well, I haven't been in a restaurant.
Right,
and
yeah.
So I went into Frank's. I sat by myself. It was safe. It was comfortable. It was nice. I had my sandwich. I left the tip. I left $10. I couldn't leave crypto. I left the $10. It was the first time I used cash in months. Everything for me lately is credit card, Apple Pay, Amazon online purchases. I don't want to hold cash.
And I think that's the virtue of getting involved in these kinds of things now, and these kinds of things being NFTs and crypto and that kind of thing, is that it allows you, right now, the barrier to entry is very low, and so you can experiment and take it slow and figure things out now before the stakes are really high.
I don't want to own cash. I want to own assets. My asset of choice is real estate because it pays me.
Yeah. Don't play hot potato with cash right now.
I don't like the cash.
If success was easy, everyone would do it. Everyone would be successful.
Right.
What do you find particularly hard about either your business or maybe just being successful? What do you find to be the really brutal aspects of that? And how do you overcome those challenges?
Yeah. There's a bunch of brutal challenges with success. I think just committing yourself to it and seeking that as something that you want for yourself in the first place is a tough thing to do. It's the persistence, the consistency, the discipline. I mean, those are the bedrocks, the foundations of having a chance of being successful. The repetitiveness, the banging your head against a brick wall, or what seems like banging your head against a brick wall a lot of times. It's very tough to do. If you're in business, it's about business. When I'm in business, to me, it's about people, business, community, everything. But at the end of the day, it boils down to your business being successful or not, if it's profitable or not. You make enemies, you have adversaries in business. That's a tough thing for a lot of people because people don't like not pleasing others. People don't like doing things which aren't in other people's interest. And, in business that happens. There's lawsuits, everyone's got lawyers, everyone's protecting their rights and interests, everyone's attacking you for having protected your rights and interests. Making sacrifices is tough. Choosing your commitment to getting beaten up and bloodied versus being with family, being with friends, watching Netflix, going on vacations, screwing off. Making that sacrifice is really, really tough. So it's not for everybody.
What fuels that drive for you to overcome that?
I feel alive when I'm working, when I'm in it, when I'm in my day-to-day battle of business and managing and leading, I feel really alive. I don't do well sitting still. I don't do well, even when I'm relaxing. My way of relaxing is often staying engaged a little bit. I don't punch the clock out at 5 o'clock and go home and then just not think about work anymore. I mean, I work late. I go home. I have dinner with my family. We're together. You know, I'm spending time with them, but I'm thinking about things that happen in my day and thinking about what I got to do tomorrow. And it's hard to manage all of that. So, you know, you really have to walk on hot coals and razor blades for a long time to get to the other side of all of that, which is the good stuff. And it ain't easy and it ain't fun a lot of the times, but you have to pursue it because you want the end result. You know what, though? It's easier than ever to achieve success now than ever before with the internet, with all of the things technologically that are out there in our world, with all of the opportunity that's out there in our world, in this country, in our marketplace where we operate in the United States. It's amazing the opportunities that everyone has. You don't have to be educated. You don't have to have a degree. You don't have to have a whole lot of experience or knowledge. You have to have a gut, a heart. You have to have an idea and the perseverance and commitment and mindset and the consistency aspects of it. And you could go out and make money. You know, you don't need an employer. The proliferation of entrepreneurship is going to be such that for the next 10, 20 years, everyone's going to become an entrepreneur where they weren't before. We're going to see so many more people become entrepreneurs. I think it's a great thing, as long as the markets are lubricated and free enough and the opportunities there to provide for the growth for those top players. But it's a competitive marketplace. You got to be tops. You can't be an average Joe. You know, you got to
rise up.
You got to rise up, man.
Yeah. Talking a lot about the future today. I feel like it's exciting.
Well, the past sucks. Yeah, well, the present's challenging. The future, we can sort of mold into what we want to make it.
That's true. Yeah. I guess the challenge is always to be looking into the future, but make sure to do the work now.
Do that work, man.
Yeah. All right. Well, I got some Zest quests for you. You ready, Peter?
Zest quests. Let's go.
Fantastic. I don't know. Maybe think of this. Maybe the hip hop sampling thing. What's something in your life that you have copied and are glad that you copied? And then what's something about your life that you feel like is really original, that it's like, I'm the only one that lives my life that way?
That lived my life that way?
Yeah. But first, is there something that you feel like you copied from someone else, from a friend, from family, something like that?
I copied my dad. I copied my brothers. Learned everything about my work ethic and how to do things the right way from them. So I saw them do it and I said, well, that's something I got to copy.
Yeah.
So I did that. I have a few other mentors in my life that I've copied things from, and I think that's fine. That's what mentors are for. You should copy the good examples and the good people. And I was lucky enough to have a couple of those in my life, and I've copied them. But for sure, I think on a cellular basis, on a DNA level for me, my dad and my 3 older brothers and my mom, I was able to really have such great examples of how to do things correctly. So I just copied the things that I thought that they were doing correctly. Things that I was original on. I told you that I invented Beverly Hills 90210.
I don't know if I heard this story. Wait,
really? I told you that I invented the cloud.
Yes, you told me about the cloud. Yeah.
This is when I'm like, 2 years old, and I was like writing ideas down on paper about businesses and ideas.
So wait, what was Beverly Hills 90210?
I came up with an idea. When I was in middle school, I was like, oh, there should be a TV show about kids in like high school, because in middle school you aspire to be in high school, so being beautiful and hooking up.
You mean 21 Jump Street?
No.
I actually don't know 90210.
Beverly Hills 90210?
Is that the concept behind that
show? You don't know that?
I don't know.
Oh, dude, really?
But no, 21 Jump Street is
such
where
a
they're
deficiency
kids,
in your
right?
age group right there. No, it's not 21 Jump Street. I would have said 21 Jump Street. Beverly Hills 90210. It was a show. It was like the hugest TV show ever on the planet for years.
Yeah.
And there was offshoots and other series that came. I mean, so shit, George. All right, look, you got to go educate yourself.
I will.
Anyway,
I'm going to go home.
It was a huge success. I remember when I was like in 6th grade or 7th grade, I was like, yeah, there should be some show about like really hot people in a cool neighborhood, like hooking up and playing sports and going out and doing high school because high school is such a stressful thing for, I don't, it was for me. It's just can be a very...
I think it has to be.
Yeah, so I thought that would be a great idea. I invented the selfie, George. Did I ever share that with you?
You didn't. No.
My friends will corroborate my story, so you can ask. I won't mention them here, but for anybody that leaves a comment, I will send you
a selfie.
Well, I send you who to ask for, but there's people that will back me up and prove it. When I was maybe, it was New York City, maybe in 1990, 1991, I was going around to like weddings and parties, and I was taking the disposable cameras that's shooting pictures of myself like a moron. But that was the birth of the selfie, and that became my trademark thing. So I would go out around town, traveling, wherever I went, I'd look for cameras. People say, hey, can you take a picture of my wife and I? Sure. Take a picture of the wife and them, and I'd take a picture of me. Selfie style right here. And it was way before the internet and way before the cell phone and way before all that stuff. So you heard it here from me. I invented the selfie. And come on, my friends out there, I did. Back me up on this.
I'm very pro selfie. A lot of people view selfies as like this vain thing. But to me, especially with travel, whenever you travel somewhere, there's 1,000 pictures of the Eiffel Tower on its own. But there's only one picture of you with that selfie. I
Great example.
Selfies.
And that's such a great pick when people take that selfie with the Eiffel Tower right behind them and it's sort of looking up at the tower. You get the underside of your flabby neck and the unattractive sort of fat dangling part of your skin here.
It's a very brave undertaking. Yeah,
you have to know how to do that shot right. I know my good angle.
Yeah.
I don't really have more than one. I only have one good angle. You're looking at it right now. As soon as I turn my head or move my chin, it's
become a different person.
Bad news for me.
Yeah. All right, well, last question. Classic question. You're on a desert island. You only have one album, one movie, and one book, and none of them will get you off the island. What do you take with you?
Bruce Springsteen, Born to Run, Ferris Bueller's Day Off, and the book is Milan Kundera, Unbearable Lightness of Being.
Oh, word. Wow. That's solid.
Put that in your pipe and smoke it.
Excellent. I love it.
How did I do on that, George?
I think that's great. Those are
because I'm not really the intellectual here. You are, so I want to know how that fared.
Well, I mean, so let's see. Mine are Miles Davis, Kind of Blue.
Great.
The movie would have to be Ocean's 11, the new version. Yeah, the new version, not Sinatra.
Oh, your movie was as dumb as mine. I don't feel. All right.
Yeah, because like The Godfather's my favorite movie, but I don't want to live with The Godfather.
No,
every
that's
day.
not your.
No.
You need humor.
Yeah, exactly. So Ocean's 11 and book. I usually say you're not allowed to use a spiritual text because I would say the Bible, just because it's long and you got a lot of stuff there and it's great. But
it's long and you got a lot of stuff
there.
Yeah.
It's you'd never get tired of it. But if I don't count spiritual texts, O. Henry has a book, Cabbages and Kings, that I've read multiple times and I love that.
I'm not familiar with it.
Yeah, it's an old book.
George, I'm writing a book, so perhaps now I'm going to be inspired to write one that's very long and put a lot of stuff in there so that more people will want to take it to a desert island.
Yeah, maybe that's what you could call it, Peter Siegel's Desert Island book.
Yeah.
And then everyone that needs a long read,
pretty funny,
can choose it. Yeah.
Ocean's 11. I didn't expect to hear you say that. I thought you were going to say something way smarter than that.
Yeah. No, I have those movies in my repertoire, but Ocean's 11 is very high on my list.
Well, it's nice to know that you're just a
human like everybody else.
A dumb guy like me. When it comes to movies.
Hey, Ferris Bueller, actually, though, John Hughes packs a lot of philosophical shit into that movie.
How do you know John Hughes and his films, but you not know Beverly Hills 90210?
Yeah, I don't know. TV versus movies. I know a decent amount about movies. I don't know a lot of TV.
Those people went into movies. And,
I know, yeah.
Oh, man.
Yeah. It's a big gap in my knowledge. I'll read up.
Yeah, okay.
All right, thanks, Peter. I'll see you next week.